Amazon went down 95% during the dot-com bubble and then subsequently rocketed 650x to all-time highs just below $200. Now in this video, I'm going to share with you why I really believe we are pretty much at the dot-com bubble for crypto just before mass adoption. First and foremost, I want to let you listen to Mr. Bezos describe what was happening during the dot-com bubble and how his stock crashed immensely and why he was not scared. And then after, I'm going to show you exact examples of what is going on right now in the crypto, digital asset, and blockchain industry. So let's go ahead and listen to Mr. Bezos.
Most of those internet companies of the dot-com era are out of business.
Yeah.
You survived. What was it that made you to survive and virtually the rest of them are gone?
Well, that whole period is very interesting because the stock is not the company and the company is not the stock. And so as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics, number of customers, profit per unit, everything you can imagine, defects, etc. Every single thing about the business was getting better and fast. And so as the stock price was going the wrong way, everything inside the company was going the right way. And we didn't need to go back to the capital markets. We didn't need more money. The only reason, a financial bust like the internet bubble bursting is, makes it really hard to raise money. But, we already had the money we needed. So we just needed to continue to progress.
As you heard from Bezos, he knew that his stock was down 95%, but more importantly, he knew that the price was going down while the fundamentals of the overall business and metrics were going up. And actually later in that same video, he talked about how his profit margins were pretty much non-existent, but he knew that the fact that they had growing and growing user adoption and more volume, that he knew that eventually the stock price would reflect the value of the overall business and metrics, and that Amazon would become very profitable into the future. So right now, crypto is experiencing a very similar thing. It's been extremely retail driven. There's been no regulatory clarity, practically zero institutions heavily involved in it, except for the last year and a half. Now we've started to see them dribble in, and now we're at a 70% pullback right as a few really important things are happening, which first and foremost, we hear this all the time in the news. Hey, Bitcoin's declared dead. It's, down 50+%. There's no way it's coming back from this. Crypto's a scam. It's all nonsense. Blah, blah, blah. And your mom and your dad and your uncle are all telling you how stupid you are for investing into it. Meanwhile, all the fundamentals are growing and growing in this industry. So I want you to do yourself a favor and really think about what is logical here. Do we want to listen to retail investors and our friends and family and the media online, or do we want to look at what the institutions, the trillion-dollar asset managers, the ones that have tens and tens of millions of users? Let's look at what they're doing. So I want to show you a few examples. First and foremost, let's look at the actual adoption of this entire industry. So if we're looking at the growth of users, we're looking at the internet on the top x-axis there. From the 1990 to 2000, crypto, same thing, but from 2014 now to where we're at, you can see the total number of users is actually growing almost exactly the way that the internet grew back in the 90s. Now, what we've seen also is, like, for example, we're deep into the bear market. Ethereum has sold off really hard. Everything's down 70% plus. And what we're seeing, even in the bear market, Ethereum just went up 36% as far as the number of active users using the Ethereum blockchain. That went up 36% just from the last quarter, almost hitting all-time highs. It's actually at the second, it's the second place behind the all-time high that we had in Q2 of 2021. So the metrics are actually growing even at the very depths of this bear market, which is a really positive thing. But even more importantly, here's what I really want to show you is the fact that McDonald's is now set to accept payments in Tether and Bitcoin in Switzerland. And we're seeing this over and over again with these massive public companies using crypto, blockchain, and Bitcoin for payments and for a store of value. We've also seen just 2 weeks ago, we saw NASDAQ, which is one of the largest stock exchanges, doing custody for crypto and Bitcoin, which is a huge deal. They've also mentioned very, I think it was about a week ago, they mentioned that they're actually going to have their own crypto exchange. They are just waiting for regulation to occur. And I've heard this from multiple VCs that we talk to, where they talk to these really large tech companies, all right, and they have all of these things lined up for crypto and blockchain services. They just do not want to announce them yet because the regulation is not there. Okay, we also saw that Fidelity, Charles Schwab, and Citadel are literally launching an exchange called EDX. Okay, so these guys right here collectively have over $20 trillion under management, and they have over 60 million users right here. So the fact that these three giants are coming together and building a crypto exchange, do you think that maybe that's a sign that something is going on here? I would also like to address the largest asset manager in the entire world, BlackRock, with over $10 trillion under management, has also partnered with Coinbase to open up Bitcoin trading to their institutional clients. Now, you may be asking, why do they open up just for Bitcoin trading? The answer is because Bitcoin is deemed a commodity, and we are not sure yet what is happening with all the other assets. But what has happened just a few weeks ago is finally the White House has come out and said, hey, we're going to figure out this whole regulation thing on crypto. And what we're going to start with is stable coins this year. Then we're going to regulate DeFi assets in February of 2023. And then we're going to regulate NFTs in the summer of 2023. So we're going to give you all very clear rules and agenda on how we are seeing crypto and whether it's regulated from the CFTC or the SEC. So guess what is happening now that all these institutions have been waiting? We're finally getting the regulatory clarity, which I believe is a very, very good thing. People have to know what is going on with regulation before they put significant sums of money. And really, when I say people, I'm talking about institutions. And if you are in crypto to make money, which 99% of people are in crypto because they want to make more money and have appreciation in the assets that they're holding because they believe in the underlying tech, or they just are aping into something because some other smart people were talking about it, you want to see the $1 trillion companies coming into the asset. And the only way that they come in is when there's regulatory clarity, because you got to realize the institutions are not looking for a 100x return. They're looking for a 2, 3, 5, 10x type of return, but they will only take that type of return after that they know that the downside is protected. And what's the biggest downside? Regulation. Because if regulation kicks in, not only if they dive into the asset too early, guess what happens? The asset would sell off if there was negative regulatory news on it, but also they could get fined billions and billions of dollars if they participate in something that really they shouldn't have because there wasn't clear regulation. So now that is finally happening. I also want to show you a few other things that is really, really massive. Okay, Matic, which is they have an underlying blockchain called Polygon, and Polygon was typically used as a layer 2 scaling solution. Now that Ethereum is going to be scaled, Polygon has been making so much progress that now they are pretty much their own layer 1 blockchain. And I want to show you a few companies that have partnered with them, because it's not just NASDAQ and these exchanges and these banks and these asset managers trying to benefit from the trading that goes on. It's also the fundamental value that blockchain technology brings to allow users to scale into collectibles and membership type things and a lot of other utility and use cases such as tokenization with any type of asset in the history of the world. Now, I'll show you a few things that, Disney has actually partnered with Matic here recently to accelerate their NFTs and AI experience. So they're going to be offering NFTs, I'm sure, around their, Disney characters to their users through different AI and VR type experiences. Okay, Meta and Facebook also chose Polygon to launch into Web3. So obviously they're building a metaverse, and pretty much almost every asset, at least this is what I'm kind of perceiving, because I don't do deep dives into metaverse type tech, but there's a lot of really smart people that I talk to that say like, hey, the sword in the game, the characters in the game, the shoes on the characters in the game are all going to be NFTs that can be owned by the user and the gamer, which can then be sold to other users and gamers inside of that metaverse. And you can even own like land and spaceships and cars and things like that, where everything is really going to be kind of tokenized through an NFT inside of the metaverse. I know that sounds ridiculous, but if you actually look up the facts, esports and gaming is set to actually outpace the revenue and growth of actual sports. So if you think that it's stupid that metaverse and gaming is so big and blah, but that's not going to be really that big. It's just, game. Who's going to play games? Actually, there's more people playing games than sports, and the revenue projections for esports is set to overtake regular sports, I believe, here in the next 5 years. It's actually right around the corner. All right, Starbucks is also launching an NFT-based loyalty program, also using Polygon's blockchain technology. All right, and if that's not enough, Stripe is also using Polygon to make payments with USDC and other cryptocurrencies, and they're starting with Twitter. So Stripe, which is the largest payment processor, at least to my knowledge, I use it for all my businesses. Pretty much every internet entrepreneur uses it for their businesses. It's a multi-billion-dollar company, and they are also using Polygon for payments so that users can actually pay for whatever the heck they're buying with the Polygon chain and use some type of stablecoin or maybe Matic or other cryptocurrencies to pay through the Polygon blockchain. All right. So and I just wanted to point out a few that are, specifically working with Polygon. This is happening on multiple different blockchains. This isn't just Polygon, although a lot of this news has recently come out in the last 90 days about Polygon, and this has made me extremely bullish about this chain. But this is happening to many different blockchains right now. So if you don't believe that crypto and blockchain is here to stay, don't listen to what all the retail investors, what the news and media outlets are saying. Let's look at the facts, because we want to look at a few things. Number one, in my opinion, here's the most valuable things that you can possibly look at from an overall contextual standpoint, is we want to look for user adoption and user growth. We also want to see hey, how many number of active users are staying active with these different protocols. All of those metrics are growing, okay? The second thing that we want to see is, where is the big money going? Where are the trillion-dollar, billion-dollar companies and institutions going and deploying capital, time, and energy and resources? They're not going to go into a specific industry and asset class if they do not believe that it's going to be big and provide long-term value to their customers and clients. So those two things are both checking the boxes to confirm that the trend is here to stay. Now, what I would say is, it's really difficult during the depths of the bear market to try to understand this and think in your head, okay, this is what's likely to happen over the next 2, 5, 10, 20 years. But right now we're in a massive sell-off, very similar to what Amazon experienced. But what I really believe is something like this is right around the corner with the adoption of crypto and blockchain. Let me know what your thoughts are below. If you got value from this video, would really, really greatly appreciate you supporting the channel and supporting the content by simply tickling the like button. Thanks so much for watching, and I'll see you here on this next video.